What's up, guys? Alvaro here, and welcome to the Bilingual Stock Market channel again. Let's go ahead and talk about some stocks and about the craziness that happened today in the markets. And today we had another red day in the markets, guys, with the Russell 2000 going down 0.46%, NASDAQ broke even, Dow Jones went down 0.49%, and the S&P 500 went down 0.38%. So if anyone says the final close of the indices, guys, without having followed the intraday action of the markets today, then that person might think or would be thinking like, yeah, the markets didn't go up today. It was some sort of quiet day in the markets. We didn't have a bloodbath and stuff like that. But nothing farther from the truth, guys. Today we had an insane day in the markets from 9:30 a.m. until 4 p.m. Eastern Standard Time. A very volatile trading session. Starting with the president of the Federal Reserve of St. Louis, Mr. James Bullard, that guy that ruined our trading session last Wednesday or Thursday. So this guy went on the air on CNBC today. It was at 8:30 a.m. Eastern Standard Time. And he basically said that the comments that he made last week and that caused a big drop in the markets, that he made those comments basically because inflation is very overheated, something that we already know, obviously, right? He didn't sound like extremely hawkish, you know, his tone of voice. And he also said that, and I am quoting here, we can do this without disrupting the markets. So he pretty much restated what he said last week, that he believes or that according to his criteria, we should see a 1% interest rate hike in June or July of this year. But he sounded like if someone called him out because of the comments that he made last week. So the markets know that this guy is at the very, hawkish end of the Federal Reserve, so the reaction of the markets wasn't negative, right? And then at 2 p.m., 1:30 p.m. Eastern Standard Time, we had news from Ukraine, guys, because the president of Ukraine, Zelensky, said, and I am quoting, said that Russia might attack Ukraine on the 16th, so in 2 days. And at the end, he made that comment on Facebook, and the Google translation was misleading, and the markets took a big hit, and then we ended up recovering the points that we gave up when the news of Ukraine came out. So long story short, guys, the markets are as of now extremely susceptible, and any news Ukraine related or Federal Reserve related is going to cause probably a drop in the markets. And keep in mind, guys, that on Wednesday, we have the Fed minutes of the last Federal Open Market Committee. The minutes are going to be released at 1 or 2 p.m. Eastern Standard Time. And if you guys happen to remember what happened when the last Fed minutes were released, that was in, I think, early January, that was an absolute bloodbath. So we can expect the markets to be also very susceptible when the Fed minutes are released on Wednesday, as I just told you. And keep also in mind, guys, that this week on Friday, we have options expiration. So that is going to add more volatility to the already very volatile trading sessions that we are seeing as of now. And I still believe, and you guys know that I am a bull, but I just want to deliver a positive message to all of you guys. We are very likely to keep on seeing crazy trading sessions and a lot of volatility, at least until the next Federal Open Market Committee, when finally the Federal Reserve is going to announce the beginning of the new interest rate hike cycle. So you guys have to buckle up and enjoy the ride, guys. We don't have much of a choice. When it comes to the sectors, guys, nasty day across the board. The only sector that managed to close today's trading session in the green was consumer discretionary, which went up 0.57%, mainly because of Amazon and Tesla. But other than consumer discretionary, the other sectors closed in negative territory. And something that caught my eye today, guys, is the fact that defensives, healthcare, utilities, and consumer staples went down, guys. Consumer staples went down today 0.28%. Utilities went down 0.82%. And healthcare went down 1.02%. And needless to say, the inflation trade got absolutely crushed today, guys, with energy going down 2.36%. Financials went down 1.12%. I think that the 10-year Treasury yield actually went up today, guys. It went up 2%. And despite the fact that the 10-year Treasury yield went up today, the financial sector got crushed. So defensives and the inflation trade got crushed. And the markets pretty much only favored today, guys, a handful of stocks, led by Amazon and Tesla. So check this out. If we take a look at the advances and declines distribution, nasty day across the board with 2,624 stocks going up and only 4,864 stocks. 2,664 stocks only and 4,864 stocks going down. Nasty day across the board, no doubt about it. Now let's go ahead and take a look at the S&P 500. And no, this is not the S&P 500. Let me pull it up here quickly. This is Lucid Motors. This is going to be the last stock of this video. So S&P goes down today 0.38%, and it closed today's trading session at 4,401 points. So I'm going to pull up here the 1-day, 1-minute chart and take a look at this shoppiness, guys. Unbelievable. The S&P was all over the place today. So I'm thinking that if tomorrow we happen to see a green day or some sort of recovery when it comes to the S&P 500, the main area of resistance that the bulls are going to have to deal with is going to be 4440, guys. The bulls failed at 4440 or 4,440 points on 1, 2, and 3 occasions last Friday. So that is going to be the most important task, the most immediate task that the bulls are going to have to carry out. If I pull up here the 4-hour chart, then obviously, guys, the bears are in total control of the S&P 500 as of now, mainly because they were able to take on the 200-day moving average last Friday at 4460. So the most immediate task, as I just told you guys, for the bulls is going to be taking on 4440. But after doing so, they are going to have to try to take on the 200-day moving average. So these are the most important tasks that the bulls need to carry out. In terms of the tasks that the bears need to do when it comes to the S&P 500, and obviously this is my personal opinion, guys. This is what my TA says. The bears need to take on 4,330 points. We are talking about a former area of support back from mid-October. If the bears happen to take on this area, guys, they are going to be one block away from the lower pivot of January 27th at 4,222 points. However, guys, I'm thinking, you guys know that I am a bull, obviously, that we have already priced in over here at these levels a lot of bad news. So for the bears, in order to be able to take on 4330, they are going to need a very negative catalyst, guys. I don't know, maybe maybe Russia invading Ukraine, or maybe, I don't know, any president of any Federal Reserve out there, saying something very hawkish, or maybe the Fed minutes coming out on Wednesday with a very hawkish approach. But with the news cycle that we have as of now on the table, I don't see the bears revisiting 4222. I could be mistaken, obviously. But as of now, from a technical standpoint, that they are in total control of the S&P 500, but I think that they need they need another negative catalyst in order to do the 4222 job. Now let's go ahead and take a look at the NASDAQ 100. And in the case of the NDX, this index actually went up today 0.10%, and it closed today's trading session at 14,268 points. There is not really much to say over here, guys. This index is in total control of the bears. Let me check on something over here. So, oh no, not here. Okay, so we closed today's trading session, in the case of the NDX, 15% of the highs, guys. Wow, 15% of the highs. So let me double check over here. So on January 24th, the NASDAQ 100 was 17, almost 18% of the highs. So the NDX is, you know, like deep into correction territory, and it is getting closer to enter into a bear market, guys. So, and as I was saying in the case of the S&P, I think that over here, guys, in this area, we have already priced in a lot of bad news. So, and as I said in the case of the S&P, for the bears, in order to be able to revisit 13,760 points, they are going to need a very negative catalyst. When it comes to the bulls of the NDX, the most important task that they are going to have to carry out tomorrow is going to be reconquering 14,400 points. We are talking about a former area of support back from early October. Can they do that? They might. The RSI of the NDX is at 36 points. So I don't know, guys. The bears are obviously in total control of the NASDAQ 100, but I think that the bears need another negative catalyst in order to have things keep on going lower. And let's see what happens, guys. Maybe that catalyst is going to be the Fed minutes on Wednesday. Who knows? Okay, the very first stock of this video is going to be Palantir. And in the case of Palantir, the stock of this company went up today 0.99%, and it closed today's trading session at $13.26. And let me see how far away is Palantir from all-time high, guys. $45. So Palantir is, as of now, 70% of the highs. Palantir hit $45 in January of last year. So I'm thinking, guys, you guys know that I am a long-term investor as well, not only a trader. The valuation of Palantir over here is very, but very compelling. So let me show you quickly, guys, over here, investing.com. So check this out, guys. I want to show you some stuff over here about Palantir. I am going to pull up here the income statement. And when it comes to revenue, we can see constant growth throughout the last 4 quarters for Palantir. And by the way, Palantir is reporting earnings this week. So during as I was saying, during the last 4 quarters, this company has been able to grow its revenue on a constant basis. So check this out. On the last quarter of 2020, $322 million. First quarter of last year, $341 million. Second quarter of last year, $375 million. And third quarter of last year, $392 million. Constant revenue growth. Very good. And when it comes to the operating income, another very important metric, it is negative. But the execution of Palantir has been improving, guys. Take a look. Minus 156 million, minus 114 million, minus 146 million, and lastly, on Q3 of last year, minus $91 million. So yes, this company has a negative operating income, but it has been improving. The money that this company is burning before taxes, interest, and stuff has been improving. That is very positive. And if we take a look at the balance sheet of Palantir, let me pull it up here on investing.com. So the cash and cash equivalent position of this company, $2.3 billion, guys. And this is a company that has no long-term debt. Take a look. This company is sitting on $2.3 billion and has no long-term debt. And if we take a look at the cash flow statement, this gets more interesting. And why? Well, because take a look at the CFO, the cash from operating activities. It is already positive, guys. $240 million. And this is the most important metric when it comes to the cash flow statement. This company already has a positive cash flow when it comes to its operating activities. So I'm thinking, guys, that since Palantir is 80% of the highs, and because of the fact that this company has a very solid financial situation as of now, I might even consider starting a long-term position over here, guys. No joke. However, the technical analysis that I am about to tell you guys is basically to take a short-term trade. So I am going to zoom in here on the 4-hour chart, and I like the fact that Palantir seems to have bottomed out, guys, at $11.75, and after having done that, it looks like the stock of this company is starting to consolidate inside this horizontal channel. So I'm thinking that if the bulls of Palantir can take on $14.12, we are talking about a former area of resistance back from February 10th that coincides with the upper line of this horizontal channel, they might be able to fill the next gap up to $17.43. And as I just told you, Palantir is reporting earnings this week on the 17th. So let's say that this company posts a good earnings report. So what happens if the bulls can take on $14.12? Let's say that we pick up some shares at $14.30 or $14.50. And if we are able to write them up to the next important area of resistance at $17.51, we are talking about a former area of resistance back from November 1st. Then in that case, we are looking at a 17% profit trade. The RSI of Palantir is at 49 points. Very healthy from a technical standpoint. Palantir is neither overbought nor oversold. So don't be surprised, guys, if we happen to see Palantir near $17 anytime soon. And I still need to decide upon the potential long-term investment that I might be starting on Palantir, because I think, as I just told you, that this company offers a very compelling valuation as of now, or at least a very compelling financial situation as of now, and the stock of this company is 80% of the highs. Microsoft goes down today, it pretty much broke even, went down 0.01%, and it closed today's trading session at $295. This is, first of all, guys, an ugly looking chart, no doubt about it. The fact that Microsoft is trading as of now below the 200-day moving average is very negative. And this is not a good looking chart. Let's just put it that way. So for me to be able to start a trade on Microsoft, I need to see some sort of reversal, guys. Microsoft needs to tell me that it wants to go higher. In which case, I need to see the bulls taking on reconquering the 200-day moving average at $296. And after that, I need to see the bulls bursting above $302. $302 happens to be a former area of resistance back from mid-September. So if the bulls of Microsoft can take on $302, I think that they might be able to fill the next gap up to the 100-day moving average at $370. If we were able to take this trade from, let's say, $303, $304, by the way, I am noticing now that we have over here the 50 SMA on the 4-hour chart at $304. So let's say that the bulls can take on this 50 SMA near $304. And if we happen to start a trade over there and write it up to the 100-day moving average at $316, we are looking at a 4% profit. And the third stock of this video is going to be Rivian. And in the case of Rivian, we got good news, guys. It turns out to be that George Soros picked up some shares. Let me pull up here the news. So billionaire investor George Soros bought nearly 20 million shares of electric truck startup Rivian Automotive in the quarter ended December 31st, according to securities filings, whatever. So this report produced, So George Soros picked up some Rivians. And do you guys think that George Soros picked up some shares of this company just because he likes Rivian? I think that Soros must know something that we don't know about, right? So this might imply, guys, that we might start to see a shift in momentum when it comes to Rivian. So now the big question is $50 the bottom? It could be. Because in the case of Rivian, guys, the stock of this company went up to $179. Jesus Christ. So from $179 down to $50, we're looking at a 72% drop. That's a decent haircut, guys. And mind you, from a, let's say fundamental standpoint, even at $62, the stock of this company is overvalued over here, no doubt about it. But we could take advantage of the fact that Sodas picked up some shares of Rivian, and from the fact that might change that might represent a shift when it comes to the sentiment of the markets in regard to Rivian. So I am going to keep a close watch on the stock of this company, guys, because I think, and this is, by the way, a technical chart that looks like Palantir's one, but I'm thinking that if the bulls of Rivian can take on $71.21, we are talking about a former area of resistance back from early February that coincides with the upper line of this horizontal channel, then the bulls of Rivian have a first chance of filling the other gap up to $88. We are talking about a former area of resistance back from early July, and also an area of support back from mid-December. So if Rivian were able to make this push to the upside, let's say that we pick up some shares at $72.60 up to $87, we are looking at a 17% profit, nothing to sneeze at. And the last stock of this video is going to be another electric vehicle manufacturer, Lucid Motors. And in the case of Lucid Motors, guys, I am undecided over here. And why? Let me show you why. So Lucid went up today 6.19%, and it closed today's trading session at $27.44. Guys, $28 is such a critical spot when it comes to Lucid. So I'm thinking that this could be either a short or a long position. If the bulls of Lucid fail, let's say in tomorrow's trading session at $28, if they cannot take on $28, which happens to be a former area of resistance back from early September, mid-July, and early June of last year, then we might see Lucid paying a visit down to $24. This might be an option in order to buy put options. However, if the bulls manage to take on $28, then this might be a whole different story, guys, because the bulls of Lucid could fill the next gap up to $33. We are talking about a former area of support back from early November. So if we were able to take a long trade with Lucid after it burst above $28, let's say that we pick up some shares at $28.50, and if we can write them up to $33, we're looking at a 16% profit trade. The RSI of Lucid is at $50, very healthy from a technical standpoint. So don't be surprised of seeing either of these two scenarios, guys. Lucid bursting above $28 and filling the next gap up to $33, or maybe Lucid failing at $28 and paying a visit down to $24 per share. And with Lucid Motors, I am going to wrap up this video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays, Tuesdays, and Thursdays as well, 3 or 4 hours after the market closes. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to this YouTube channel, but you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember that this is the Bilingual Stock Market channel, the YouTube channel, in which we talk about the markets, but we do things a bit different because we talk about the markets in 2 different languages, English and Spanish, so you can pick your preferred language. But most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs, just like you guys and myself. My name is Alvaro, and I will see you guys tomorrow once again, 3 or 4 hours after the market closes. Peace out.